right, everybody, welcome back to the deep dive. Today, we're going to be tackling something I think a lot of you out there are interested in, and that's leveraged ETFs.
Leveraged ETFs, yeah.
And specifically, we're going to be getting down and dirty with single stock leveraged ETFs.
Ooh.
So if you're not familiar, a leveraged ETF is basically like an investment that's designed to like amplify the daily return of some underlying asset, like a stock or whatever.
Exactly. Yeah. And, most people, when they think of ETFs, they think of like traditional ETFs, which are meant to track like a basket of assets, right? Like a whole bunch of stocks in one ETF.
Yeah, for diversification, right?
Exactly. Diversification, exactly.
But today we're talking about kind of the crazy cousin of the ETF world. And that's the single stock leveraged ETF.
It's the single stock.
So we're talking about, like, imagine trying to magnify the gains or the losses of like Apple or Tesla or something like that.
Yeah, like in a single day.
In a single day.
Yeah. It can be pretty wild.
So yeah, we're going to kind of break down how these things actually work, what are the risks, what are the rewards, and why they require a very, very cautious approach.
Exactly, yeah.
I mean, I kind of think about it almost like, gambling, right?
Yeah.
It's like you're going to a casino.
You're putting your money where your mouth is, right?
Right, exactly.
Yeah. Yeah, and that's why it's so important for us to have this deep dive today so that we can really sort of equip our listeners with the knowledge that they need to really understand this.
Absolutely.
Yeah.
And full disclaimer, this is purely for educational purposes.
Yes, of course, always.
We are not offering financial advice.
None at all.
This is not a suggestion to invest.
No, this is just to educate.
Yeah, just education.
Right.
So, when we're thinking about leverage, I think the best way to understand it is think about like betting on a horse race.
Okay, I like it.
Yeah, right. So like if you bet on a horse and you're using like a 2 times leveraged ETF, that's like doubling down on your bet.
You're doubling down. Exactly.
Right. So if that horse comes in first, you're going to double your winnings.
Right.
But if that horse, trips or something,
you're out double.
You're out double the money. Right?
Yeah. That's the risk and reward of leverage right there.
Exactly.
Yeah.
So, like we were talking about before, let's take Apple for an example.
Okay, yeah.
There's an ETF out there called AAPU. It's the Direction Daily AAPL.
Bull 2X shares.
Bull 2X shares, right.
Yeah.
So what this means is that it's aiming to return twice the daily performance of Apple stock.
Twice the daily performance. That's what that 2X means, yeah.
Right. But then on the other hand, right, what if you're a little bit more of a pessimist? You're thinking that Apple's going to go down. There's something out there called AAPD.
AAPD, right? And that one's the Direction Daily.
Yeah.
Apple Bear 1X shares.
Okay, so that one's going to kind of do the opposite.
Exactly.
So it's like a mirror image. It's going to give you the inverse return.
Yeah, like if Apple goes down 1%, AAPD should theoretically go up 1%.
Got it. Okay, so
yeah.
I mean, that's kind of wild.
It is wild.
So we've got a lot of stuff here, right? I'm seeing like AMZU, AMZD, those are for Amazon, I guess.
Those are for Amazon, yeah.
We've got NVDU and NVDD. Those are for NVIDIA.
Yep, NVIDIA.
And then Tesla, TSLL, TSLS.
Tesla, yep. And you'll notice the pattern there, right?
Yeah.
You got one for the bulls and one for the bears for each of these.
That's crazy. So like
pretty much any way that you think the market's going to move, there's probably a leveraged ETF out there for you.
Exactly. So you can kind of place your bets on either side.
Yeah.
Okay.
Uh-huh.
So now I got to ask, right?
Yeah.
Why would somebody choose this over just buying the stock itself?
Right.
Like, what's the advantage here?
Well, I mean, like we were talking about with the horse race, right? Some people, they want that. They want that thrill.
Yeah.
They want that chance to double their money.
Right.
So it's all about risk appetite.
Right.
Some people, they're okay with taking on more risk for the chance of a bigger reward.
Right.
And that's where these leveraged ETFs come in.
And also, like, I'm guessing there's like a certain skill level involved too, right? Like you have to want to know what you're doing.
You really have to understand the mechanics of how these things work.
Yeah.
The daily rebalancing, the compounding effects.
Right.
All of that stuff.
So let's talk about the daily rebalancing.
Okay.
Because this is the part where...
Yeah, this is where it gets a little tricky.
Yeah, this is where I start to kind of get lost.
Okay. Well, basically, the way it works is that these ETFs, they reset their leverage.
Every day.
Every single day. Oh. Yeah, so that means that 2X multiple, or that -1X multiple, it only applies to that day's price change.
Okay.
Right.
So, like, hold on.
Yeah.
Even if Apple goes up, like, consistently over a month,
yeah,
holding AAPU might not actually give me a smooth 2x return.
Exactly, because you've got that daily reset.
Because of that daily reset.
Yeah, it's not like a straight lineup, you know?
Yeah.
It's more like you're riding a roller coaster.
Okay. Yeah.
You're going to have your ups and downs, even if the overall trend is up.
So it's almost like trying to predict the weather, right?
Yeah. Yeah, it's hard to predict.
Like you know the general trend's going to be warmer in the summer.
Right. But you don't know what each individual day is going to be like.
Exactly.
Yeah, and that's why, with these leveraged ETFs, you really got to be careful.
And that's why our research keeps emphasizing the volatility of these things, right?
Exactly. The volatility is huge.
Like what are some of the other risks that we need to be thinking about here?
Well, I mean, the biggest one is that leverage, right? It's a double-edged sword.
Yeah.
So like you said, if Apple goes down even just a little bit, that loss is going to be magnified in AAPU.
Right.
So you could end up losing a lot more money
than if you just held the stock itself.
Exactly.
Oh, okay.
And then on the flip side, if Apple goes up a lot, you could make a ton of money.
Right.
But the thing is, you got to be right.
You got to be right.
You got to be right about which way the stock is going to move.
Yeah.
And you got to be right consistently.
That's the hard part.
That's a really hard part.
Yeah.
Yeah. And then the other thing is, you're talking about single stock ETFs here. Right. So you're putting all your eggs in one basket.
Right.
You're not getting the diversification that you would get
from a traditional ETF.
From a traditional ETF that tracks like the S&P 500 or something like that.
Yeah. Okay. So it sounds to me like these are not for, your average everyday
No, definitely not.
investor.
I mean, I would say these are for experienced traders.
Okay.
People who
know
what they're doing, who are comfortable with risk, and who are, really looking to capitalize on those short-term price swings.
Right.
Because, like we were talking about, holding these long-term, it's really unpredictable.
Because of that daily reset.
Because of that daily reset, exactly.
Right. So, I mean, I guess the big takeaway for our listeners is that leveraged ETFs,
especially single stock,
especially the single stock ones, are powerful tools.
Yeah, very powerful.
But very, very risky.
Yes.
And you really, really, really have to understand what you're doing.
Exactly. You got to do your research. You got to understand the potential downsides.
Yeah.
You gotta consider whether these even fit into your overall investment strategy.
Right.
Right. And of course, we're just offering information here.
Right.
This is not financial advice.
Not financial advice.
Always do your own research.
Absolutely.
Yeah.
So, I think this has been a really great overview.
Yeah, I think so too.
Of these single stock leveraged ETFs.
I hope our listeners found it informative.
Yeah, and I think it's we've learned about the potential rewards,
the risks,
the very real risks.
Yeah.
And I think what would be interesting for our listeners to think about is this: imagine you were presented with two options. Okay,
right.
A 2x leveraged ETF on a company that you really, really believe in.
Okay.
Or a traditional ETF that tracks the S&P 500.
Oh, interesting.
Which one would you choose and why?
That's a great question to think about.
Yeah, and there's no right answer here.
No, not at all.
It's all about your own personal risk tolerance and your investment philosophy.
Exactly.
So think about that.
Yeah, let us know what you think in the comments.
All right, we'll see you next time.
See ya.
On The Deep Dive.
Bye.